The trend is your friend. Ride it until its end, until it reaches its bend. We are in the game of probabilities and we want to find the end of the trend before it reverses and also the end of a trend before it reverses. So you can buy at the optimum positions and also sell at the optimum positions. We are doing a 3-part series to VeChain, breaking it down. This is part 2, where we're going to use Fibonacci ratios on how we projected in advance the end of a wave 2, what looks like has occurred before it really takes off to all-time new highs. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. Let's dive straight in. All right, VeChain. First of all, knowing the markets moves in 5s and 3s, and we did an analysis on VeChain back in October 12th. And what we said was the market looks like it's doing a correction. And we projected this 5 months in advance. We said another move up, down, and then looking for all-time new highs. And it looks like VeChain is at this point right now, but we projected this in advance. And we want to know this. And Elliott wave and Fibonacci is one of the most powerful tools that you're ever going to come across to analyze the markets like a pro in an objective, non-emotional fashion. So here's VeChain as of today. This is live data for VeChain. But what I want to really draw on this, because I want to get what we covered, just a quick synopsis or summary of what we covered last part 1 was a move up and a move down. We called that the macro. It's called a wave 1 and a wave 2. And then we said this here broke down to an A, B, C, called an intermediate wave count, A, B, C. And within that intermediate wave count, this broke down to 3 waves, which is a microwave count. And this broke down to what looks like some type of 5-wave structure to the downside. And then we ended up with, I've got it over here. Bang. This is what we ended up with, right? So it looks like a lot, but really what we've done is 3 degrees of wave count. The macro, the intermediate, and the micro, and it gives us context, gives us massive context in the grand scheme of things. But what we're going to focus on today is pattern enough to say this is likely to be an end of a wave 5 of a C of a 2 before we see all-time new highs, potential all-time new highs, right? We're not going to go, no, we want more probability, we want more. So what we can do is we can add Fibonacci ratios. There's 3 main ratios I'm going to cover with you today that allows you to see in advance that this is a high probability low for a wave 2. I'm just getting rid of these darker lines just to clean up the chart a bit, just so we can really do a clean bit of analysis over here. Let me just move this over here as well. Perfect. All right, first things first, what you need to know is, what is wave 2 from a psychological perspective? Well, wave 2 is simply a retest of the beginning of wave 1. And there's 3 common ratios, really common ratios: a minimum, typical, and a maximum, right? There's a retest, and it acts as a launch pad, almost like a platform, a launch pad to rocket off. And wave 3 tends to be the most aggressive, right? We want to be aware of that, really aware of that. So the 3, keeping it really simple today, 3 ratios we're going to, or 3 bits of Fibonacci we're going to do is we're going to measure wave 1 and do a retracement. And by the way, if you're not used to Fibonacci ratios and using it, I've created a Fibonacci masterclass on how to calculate these ratios so you can see where's the most typical common ratios. If you click it in the link below, you'll be taken to this page. Click on free Elliott wave and Fibonacci masterclass and you'll get immediate access. Click yes, show me how, pop in the details, and I break it down for you step by step. So with VeChain, what we're going to do, again, this is why and how I knew what was likely to happen, probabilities never certainties, in the video that we did 5 months ago. So here we're going to take this retracement low to this high. Make sure I got that click, low to this high. And there's 3 ratios. The 3 ratios is 50, 62, and 78.6. And you can tell if we look over here on the left-hand side, we are right at this 78.6% zone. So the other 2 we can actually get rid of, those 2 and those 2. Right? And that tells us, now we're looking at this. Normally you do this in advance. Normally you do this when the price is over here. You can do this in advance, right? But this just tells us what you should be looking for when you're doing fresh analysis. And this is what we would have done back in October. Then next, what we're going to do is something called an external retracement. What we're going to do with external retracement, we're going to measure this wave. Most people don't know about this one. This one is like a hidden secret. So I'm going to share it with you. It's basically you're measuring wave B and projecting it for an end of wave C. And there's two typical ratios. So we're going to use this, again, the same retracement tool. We're going to go this low to this high. And the two ratios that I want is 1.618 and 1.272. In the masterclass, I break this down slower, step by step, especially for wave twos, because wave twos is the most powerful one that you really want to be aware of. You can see this 1.618 down there is really far away from the 78.6. So it's going to be likely this 1.272 is more significant. And then the cherry on the cake, the icing on the cake, one of the most powerful ones that combines with this. So we're looking at Fibonacci ratios on 3 degrees of wave counts. We've got the macro, the intermediate, but also then, well, actually, we're still on the intermediate. We can do a micro as well, which actually I'll do it as a bonus. So what we're gonna do here is I'm gonna do it from this angle, but I'm gonna measure this top of this wave A to the low of the wave A. Again, I break this down in more detail in the masterclass, and there's two main ratios. Well, there's actually three, but the two main ones is 62% and there's 100%. You can see the 100% is way down out of range. There's a 62%. So what you can clearly see now is that we've got a cluster, a really clean cluster of this zone over here. And what we can also do as a last one as a bonus, especially when the wave count it's pretty clear here. It's pretty clear here. Is an end of a wave 5. I do cover this in the masterclass. I can just do it quite fast there. There's three main ratios, but the two that are going to be significant is over here. So the main premise here is that we've got this very high probability. We've got pattern, which is a wave 5 over C over 2, and Fibonacci ratios. Now this makes this a much higher probability end of a wave 2 zone. Really, really, really important, really, really powerful. So now I just want to ask you the question, like, when the market is, let's just say, this is, because we're doing this one in hindsight, but when I did this one, it was in foresight, like we're in the future. We were looking to be 2 steps ahead. So let me just make this incredibly clear to you. When the market is, let's just say here, this is when we'll be doing this type of analysis, right? When the market is approaching this. So rather than trying to buy too early, we can go, look, until this low has been exceeded and we hit this range, we don't need to be acting, or we know what's likely to occur. And then it's, if and when the market unfolds, and it gets into the zone, this is when we get onto high alert to go, all right, our ratio zone has been met, the pattern position has been met. Now is the time to start looking at, okay, entry position. And then now the market it's not taken off, but it's done a good movement to the upside. WD Gann said it's best, one of the safest times to buy is when the market makes the first move to the upside, an overbalance of price, and then makes its first correction. And then this low should not get exceeded if this holds. So this low over here should not get exceeded. And then if it does correct into this zone, that might be a good buying opportunity, because then we anticipate VeChain to really, really rocket to hit all-time new highs to the upside. Yeah, hopefully that makes sense. So today, what we covered, we did it relatively fast. Fibonacci retracements based on the macro wave count, alternate price projections and external retracements based on the intermediate wave count, and then we did an end of wave 5 based on the micro wave count. That is really powerful and significant. So now we got Fibonacci price on 3 degrees and Fibonacci and Elliott wave pattern on 3 degrees. We did that in part 1 and part 2. What we're going to do in the next part of the VeChain series is where should we anticipate with high probability for VeChain to go. The trend is your friend. Ride it until its end. So this we're looking at as the beginning of a new trend. The trend is your friend. Ride it until its end, until it reaches its bend. Whereas the high probability of, if it does take off, whereas the high probability end of a wave 3. And we can project that in advance and anticipate what's likely to occur so we can plan for it, like intelligent business individuals, and make objective mechanical decisions based on mechanical information rather than emotion. Emotion is the enemy over here when it comes to trading or buying and selling, because it can take over And if you don't have a clear plan, then it's just not going to look good for most people. So take my free Elliott Wave Fibonacci masterclass. I break this down in more detail. I think you'll really enjoy it. And then come back to this video and rewatch it with the eyes of knowing the basics of Elliott Wave, the 3 key rules, and then the key Fibonacci ratios. Again, you'll get immediate access. Show me how, and it's video on demand. So it's like literally you get access straight away. There you have it. There you have it. So if you like today's content, like, subscribe, hit the bell notification. Let's finish on a quote. Let's finish on a quote off the top of my head. Let me actually go. I'm going to just loop the one that we said during the video. The trend is your friend. Ride it until its end, until it reaches its bend. But then we want to know, how can we identify the beginning of a trend and the end of a trend on a macro wave count and on an intermediate wave count? Well, the best by far tool that I found over, because I use many tools, I've paid many thousands, many mentors over a decade, and when the best thing that I personally came across that I really resonated with me, and what resonated, like it just made sense, was Elliott Wave combined with Fibonacci ratios, and then add the seasoning of momentum. It's just a powerhouse combination, especially in a highly speculative market, Bitcoin, cryptocurrency, blockchain. So if you like today's content, like, subscribe, hit the bell notification, and I'll see you soon.